Today, we are diving into an exciting topic: 20 must-know money phrases for a secure financial future. Whether you're a finance whiz or a beginner, these phrases will provide you with a foundation to strengthen your financial literacy. Phrase 1. Compound interest. The first phrase is compound interest. Albert Einstein famously referred to it as the eighth wonder of the world. It's when your interest earns interest, allowing your wealth to snowball over time. Understanding compound interest can empower you to make better investment decisions and plan for a secure future. Phrase 2. Diversification. Moving on, we have diversification. In the financial world, it's about spreading your investments across various asset classes to minimize risk. Remember the saying, don't put all your eggs in one basket? That's essentially what diversification is all about. Phrase 3. Inflation. This term refers to the increase in the price of goods and services over time. Why does it matter? Well, it erodes your purchasing power, which is why your investments should ideally grow at a rate that outpaces inflation. Phrase 4. Net worth. The fourth phrase is net worth. It's the difference between what you own, your assets, and what you owe. Knowing your net worth is key to understanding your current financial standing and planning your financial future. Phrase 5. Liquidity. Coming up next is liquidity. It's about how quickly you can convert an asset into cash without affecting its price. Cash in your bank account is a perfect example of a liquid asset. The more liquid your assets, the easier it is to manage unexpected expenses or take advantage of sudden opportunities. Phrase 6. Risk tolerance. Let's talk about risk tolerance. It refers to your ability to withstand losses in your investments. Knowing your risk tolerance helps guide your investment decisions, ensuring they align with your financial goals and comfort level. Phrase 7. Asset allocation. This is the strategy of dividing your investments among different asset categories, such as stocks, bonds, and real estate. A well-thought-out asset allocation helps you balance risk and reward according to your financial goals. Phrase 8. Budget deficit. The eighth phrase is budget deficit. In personal finance, it's when your expenses exceed your income. If you're running a consistent deficit, you may need to reevaluate your spending habits and look for ways to increase your income. Phrase 9. Emergency fund. Moving on to emergency fund. An emergency fund is a stash of money set aside to cover life's unexpected financial surprises. It provides a financial safety net so you don't have to rely on credit cards or loans in a pinch. Phrase 10. Tax bracket. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. The 10th phrase is tax bracket. It's the rate at which your income is taxed. Knowing your tax bracket can help you strategize your financial decisions to minimize tax liabilities. Phrase 11. Cost of living. Next up, cost of living. This refers to the amount of money needed to sustain a certain standard of living. It includes necessities like housing, food, taxes, and healthcare. Understanding the cost of living is crucial for budgeting and planning your financial future. Phrase 12. Passive income. Coming next is passive income. It's the money you earn that requires little to no daily effort to maintain, like rental income or profits from a business partnership. It's a powerful tool to achieve financial independence. Phrase 13. Return on investment. Let's dive into return on investment, or ROI. It measures the gain or loss generated on an investment relative to the amount of money invested. It's a key factor to consider when making investment decisions. Phrase 14. Debt to income ratio. Next, we have the debt to income ratio. This measures your total monthly debt payments against your monthly gross income. Lenders use it to assess your ability to manage monthly payments and repay debts. Phrase 15. Credit score. Next is credit score. This number represents your creditworthiness, and lenders use it to determine if they should give you a loan and what your interest rate should be. A good credit score can save you thousands of dollars and lower interest rates over time. Phrase 16. Bear market. Moving on, we have bear market. This term is used when the stock market experiences prolonged price declines. It's crucial to understand market trends to navigate your investments wisely. Phrase 17, bull market. On the flip side, we have a bull market. This is when the stock market shows a trend of consistently rising prices. Optimism and investor confidence are typically high during these times. Phrase 18, fixed expenses. The 18th phrase is fixed expenses. These are expenses that don't change from month to month, like rent or mortgage payments. Knowing your fixed expenses helps with budgeting and ensures you cover essential costs. Phrase 19, variable expenses. On the other hand, variable expenses fluctuate from month to month. Think about costs like groceries, utilities, and entertainment. These expenses can often be adjusted depending on your financial goals. Phrase 20, time value of money. Finally, we have the time value of money, or TVM. This concept suggests that money available now is worth more than the same amount in the future due to its potential earning capacity. This core principle underlies many areas of finance, including investing and retirement planning. Remember, knowledge is power, especially when it comes to your finances. Thank you for joining us today, and don't forget to subscribe to our channel for more financial wisdom.